hustlers, welcome back to the channel. Thank you so much for tuning in. If you're new, we make sense of our finances and we make better informed decisions where our personal finances are concerned. Now, a lot of you guys watch my, actually to be exact, 85% of you guys watch my videos but you're not subscribed. Why? Please click the subscribe button down below right now so you do not miss out when I do post a video. Before we get on to today's video, let me just announce the 2K giveaway. Drum roll please. The winner is Gia Moiketsi's channel. She says I took a personal loan in 2019. I remember them telling me what my interest rate is and all the other information, but I forgot the moment I left the bank. After watching your videos, I realized that I have been very ignorant when it comes to my finances. I called the bank and asked them to send me my contract for the loan, and I find out what type of interest it is, fixed. I even found out that my interest rate is above 20%. I was shocked. Imagine. If I had watched your videos before taking the loan, I would have known that I have to negotiate for a lower interest rate, and maybe I would have asked for a variable interest rate instead. I am now planning on paying additional amounts on my monthly loan repayments because I know that it will reduce the term of paying off the loan. Thank you for the information you share. It is changing lives. Thank you so much for this comment, Gia, and thank you so much to each of you for commenting and engaging on my last video. I really do appreciate, well, the previous video, the giveaway video. I really do appreciate it. So Gia, please do pop me a mail on my email address. I'll leave my email address down below so I can get your prize to you. Okay guys, so today's video is everything stock market related. We are starting or continuing with the series of making sense of, how we make sense of a financial term, a financial a personal finance term, myth, habit, anything personal finance related. We make sense of it on this series and on this channel. So let's start off by defining what the stock market is. You guys know we go through definitions together here, and then we obviously go through the rest of the information. So what the definition says is that a stock market refers to the collection of markets and exchanges where regular activities of buying, selling, and issuance of shares of publicly held companies take place. Note publicly held, meaning it's publicly listed companies and not private companies. Some financial activities are conducted through institutionalized formal exchanges or over-the-counter OTC marketplaces which operate under a defined set of regulations. So all the buying and the selling and the activities in the stock market is regulated. There are some regulations that govern this process. There can be multiple stock trading venues in a country or a region which allow transactions in stocks and other forms of securities. I know this is a mouthful, but basically all this is saying is that the stock market is a place where buyers and sellers of financial instruments meet, and in this place or in this market it is regulated. There are certain rules and things that govern the process and the transactions of it, just to protect everyone involved. And it's different types of instruments that you can find on the stock market. That is just basically what it is. So let's define, or let's go through what type of products or items can you find on the stock market. The first type of products you can find is stocks or shares. The second type is bonds. The third type is different types of funds, which I will explain what they are. The fourth is currency, and the fifth is cryptocurrency. So those are the type of financial instruments that you can potentially find, or possibly find, or basically you can find on the stock market. Right, let's go through and define what a share is. A share is a percentage or ownership of a company, of a publicly listed company. And let's just explain this using an example. Let's say, for example, there is company X, and company X wants to issue a share or issue shares to the public, you and I, for us to purchase, for them to raise funds or in like whatever projects they want to work on, whatever the reason why they need those funds, they would issue shares and we would buy those shares. As the word explains, we are sharing whatever is issued amongst ourselves. So for example, company X puts out 100 shares onto the market, and you as an individual buy 20 shares. You then own 20% of the company. So you have 20% ownership. That is basically what a share means. Then the next one is a bond. And basically what a bond is that it's a fixed income instrument where a lender, or it represents a loan by an investor to a borrower. Common bonds are corporate or government bonds that exist where you as the lender give a loan to the bank, to the government by a use of a bond, right? And the return is agreed upon. So the return interest is agreed upon. And how do you make money is that you make money from regular interest payments throughout the period of the bond, and then at the maturity or the end of the period of the bond, you then get your initial capital back as like a lump sum or a payout. Bonds can exist in a year. The term can be a year, 5 years, 10 years, 15 years. It just depends on the term of the bond. Most common bonds are government bonds. I will leave a link down below to the site of retail bonds where you can buy a bond or purchase a bond or invest in a bond, a government bond in South Africa. So I'll leave the link of retail bonds down below. Then the next one is the different types of funds, which is another instrument you can find on the stock market. And in the different types of funds, we have a mutual fund, or in South Africa we know them as unit trusts. We have ETFs, which are exchange traded funds. We have index funds, and we also have hedge funds. Do not worry, I will be explaining these funds in later videos as we delve deeper and go deeper into all these different types of instruments you can find on the stock market. So you really want to be subscribed so you don't miss out on that information when that information comes through. And all basically in simple terms, what a fund is, it's a pool of money that is allocated for a specific purpose. Let's use the example of ETFs. For example, ETFs basically manage, or it's an investment of a specific type of instrument or financial instrument. Let's say, for example, this basket is property. The specific purpose of this basket is property, and in this basket is different types of companies that are property related. So it's property investment companies, and everything property related is in this basket, and the big basket is property. So when you as an investor, you are investing in this basket, but then you are initially buying bits and pieces, little bits and pieces that are broken up into different types of contributions of this big basket. And let's say in this property basket there's 40 companies, and the weighted average of each company is different, and you as an investor own a stake in each of these little companies. That's just essentially what a fund is for. It's like a pool of money that is allocated to a specific purpose. So yeah, then the next thing, or the next financial instrument you can find on the stock market is currency. And basically what currency relates to is the foreign currency and exchange, commonly known as Forex. I know that Forex term has such a bad name in South Africa, but you want to be subscribed because I will be delving deeper into what the Forex market entails. How do people make money from it? How can you get involved from it? And is it really a scam? So you really want to be subscribed to my channel to find that out. So what happens in the Forex market is that it's a global marketplace for exchanging national currencies against one another, right? So if you are, for example, wanting to travel to the United States, you have to obviously convert your rands into dollars so you can have that currency that operates in that country. And essentially, some people, you don't actually get dollars, but you would get like dollars on the Forex exchange, and you would buy them against one another as currency pairs, and that is essentially Forex market trading or trading on the Forex market. And this is said to be one of the largest and most liquid asset markets in the world because of the movement, and there's just so much movement of buying and selling that happens, so it's very, very liquid. The next thing is cryptocurrency. Now, cryptocurrency has existed for quite a while, and in South Africa it's a fairly new term. I think it was first introduced in 2008, and a lot of people are skeptical. We even have someone in South Africa who has even written a book, Mpho Dagada has written a book about how he made his first million at 21 using cryptocurrency. So it is a very big and lucrative market that exists within the the stock market. And this basically refers, or what a cryptocurrency refers to, is that it's a digital currency that uses an encryption. So instead of using actual physical money, it's a digital currency. Everything is online. It uses encryption algorithm to secure the processes in generating coins and conducting transactions. So everything is done online, and a lot of businesses now are accepting Bitcoin as a payment form. Instead of using your card or using Zappa or anything, you can pay using Bitcoin. Cool. So now let's go through to how does the stock market really work? Like, what makes it work and how does it work? So what the stock market does is that it provides a secure, a safe and regulated environment where participants, market participants like myself and you, can transact in shares and other financial instruments with confidence that there's zero to low risk involved, or operational risk. And why the stock market exists, to make sure that you and I are secure, is because there's so much movement, there's so many things in there. Like, we've defined that there's so many different financial instruments in the stock market. There needs to be some type of regulation, there needs to be some type of protection for you as an individual to make sure that your money is secure and the transactions are secure, and you are essentially participating in something that's regulated, something that's fair, and something that you will get the best out of it should you use it properly and make the right decisions when you are using it. When we are talking about how the stock market works, there's two types of market that exist in it. There's a primary market, there's a secondary market. The primary market exists where a company basically issues and sells shares to the public, and then the second one exists where a trading platform exists where you can exist, and basically the platform is there to facilitate the selling and the buying of the listed shares. So the first market is just where a company issues shares to the public. Then the second a secondary market is where you it's like facilitating a trading platform where you can buy and sell shares. And in South Africa, there's a regulation for the stock market, is the South African Institute of Financial Markets, because at the end of the day, you want to make sure that you're getting the best price, the right price for your investment. And every single company is following a set of rules to make everything fair for everyone. Now let's go on to who participates in the stock market. Who are the participators? Who are the contributors? The first place, or the first people that I want to mention, are stock brokers. And essentially what these people do is that they buy and sell or perform financial financial instruments on behalf of their clients. So they perform this buying and the selling and all that on behalf of their clients, and they have to be licensed to do this. Not anyone can just be a stockbroker. You have to be licensed. And if you're interested in finding or seeing a list of licensed stockbrokers, they are available on the JSE. I will leave a link of the JSE down below so you can have a look through and see. And a lot of the times when people use stockbrokers, it's essentially people who have high income or high portfolio type of portfolios or investment portfolios, because a stockbroker is quite expensive and they have fees entailed or attached to their service, because they have to make their money. Most of them work like this. They have to make their money first before you can get a profit from that investment. And if you are someone who doesn't have a lot of money, you won't be able to afford to pay them, and sometimes you end up making a loss on your investments because they take their portion first before they pay out whatever profit you have made. So a lot of people use stockbrokers who are quite wealthy and they've got large portfolios, and they can basically manage or handle or pay these fees entailed to having a stockbroker. Then the next participants that I want to mention is portfolio managers. And what portfolio managers do is they are professionals who invest in a portfolio on behalf of their clients. So they get recommendations from analysts on what to do and how to manage the portfolio, what to buy, what to sell, and within the portfolio. And they make decisions on behalf of their clients on a specific portfolio. So people who use portfolio managers or unit trusts, hedge funds, even pension funds use portfolio managers, because when you are contributing towards a pension fund, they do invest that money somewhere. So there's a portfolio manager who handles that process. Then the next people I want to mention who are participants of the stock market, they are investment bankers. And investment bankers, essentially, they assist private companies who want to go public via IPO, and they are also companies or people that assist companies that are involved in mergers and acquisitions. this all forms part of the stock market. They're the next people I want to mention who are participants in the stock market, and they are market makers. Basically what these people do is they're broker dealers who facilitate the trading of shares by having a bid and ask price, and as well as maintaining the inventory of these shares. An example of this is the Easy Equities platform, my absolute favorite platform. I feel like at this stage Easy Equities should be like, you know, sponsoring me, because I talk about them all day, every day, everywhere, on my Instagram, on my WhatsApp, on my Facebook, every single way. And what they do is basically they facilitate a platform where you can buy shares of the listed companies, and you know, they also manage the inventory of how much is available and all of that stuff. So that is everything that has to do with stock markets. The next video we are talking about everything that has to do with shares, where to buy them, when to buy them, when to sell, what to do, what not to do. Everything shares related is in the next video, so you really want to be subscribed. Don't want to miss out on this making sense of series. Please drop a comment down below if you understanding the stock market a bit better, and if you are excited for the next coming videos in this series. As always guys, keep hustling. I'll catch you guys on my next one. Thank you so much. Bye.